The demand for independent, high-touch family offices has never been higher. Globally, the number of family offices is expected to grow by more than 30% between 2024 and 2030, reaching nearly 11,000 offices with more than $5 trillion in assets under management. In the Netherlands alone, the number of ultra-high net worth individuals has grown by over 40% in the past 10 years, creating unprecedented demand for trusted advisors. Today, we dig into what's behind this explosive growth and how one entrepreneur built one of the country's fastest growing family offices, now advising 130 wealthy families. Hi, and welcome to Wealth Insider, a podcast by Performative. This is where industry meets insight, where we sit down for honest and engaging conversations with voices from every corner of the financial world. Together, we explore trends, strategies, and partnerships that are shaping the future of wealth management. Wealth Insider brings you closer to the people and the ideas that are driving the industry forward. Hi there, and welcome back to Wealth Insider. I'm your host, Christian Lindvall, Global Commercial Director at Performative. Today, we've taken the show on the road to Amsterdam, where we are thrilled to be joined by a founder of Momentum Family Office, Frits Moonen, who's joining us today in the studio. Frits, thank you so much for joining us.
Thank you. Thank you for having me.
Yeah, absolutely. So I think maybe a good place to start is to maybe chat a little bit about Momentum Family Office. What type of firm have you created, and also what type of clients are you serving?
Yeah, good question. So I started Momentum about 7 years ago because I thought that advice and product should not be done by the same party. And so I thought I'm going to build a company who does only fully objective advice for entrepreneurs. And that was the birth of Momentum Family Office, focusing on what we call the down-to-earth, quite often self-made entrepreneur, people nice to work with, people who became very successful but are still nice to be with. Mm-hmm. And that's how we expanded over time.
So what prompted that? So you started back in 2019. I think in your previous life, you were in private banking with ING. What sort of prompted you to go out on your own and start it?
Yeah, so it was a few things. One of the first things it started with was that I was maybe a little bit naive, thinking that private banking had something to do with independent advice or with helping the entrepreneur with whatever solution he needs. But of course, that wasn't the case, as I found out over the years. Private banking is a sales channel for products and products from the same party. So it's very hard. It's also very hard for a bank to help a client then in whatever he needs, because his hands are tied. So and that's what opened my eyes a little bit on I think the joy in this profession comes from helping people with whatever they need. If you can help someone with whatever he needs, then that is what you come out of bed for early, because then you can really add value. And that's when I started to think, all right, what if you're fully independent, can select any products in the world, and just data driven are going to look for the best ones available? And then I thought that's going to be a lot more fun. And also a trigger was that, like, I would speak on a daily basis, like every day, 1, 2, or 3 entrepreneurs coming into the bank saying, hey, I sold my business, or I got dividends and I've got 5 or 10 or 20 million now laying around. What should I do with it? And they would come without an advisor, most of the time not being financials themselves, and then ask the bank, what should I do with it? And then I was already thinking, while working at the bank, I would think like, maybe it's not too smart to walk into a sales office with a lot of money in your bag and asking, what should I do with it? Because then what are the odds of getting fully independent advice? If you don't know anything about it, probably someone is going to sell you something. Yeah.
That makes sense.
That was the cue that I thought, I'm going to switch sides. I'm going to sit on the opposite side of the table. I'm going to be the independent advisor of the client. So that was my cue. That's what I did.
Yeah, no, that's super interesting. But I'm curious to know, like, from the experience you had in a big company like ING, what you learned there. Did you take any of those lessons of what you learned from ING and, like, sort of, I guess, put those into Momentum Family Office, starting your own thing?
Yeah, for sure. Of course, like I'm still very grateful for ING for giving me a lot of opportunities when I was very young. I was very young as a trainee, and was a private banker. It was still like a 5 to 10 years age difference with at least the next colleague. So I'm very grateful for ING for also through the traineeship you learn a lot about. I did a lot of ordering for clients, just directly ordering on the stock market, the personal banking, the private banking. So you learn a lot about finance as a whole, but also for working for clients. How do you treat your clients? How do you do your meetings? So there was a lot of good stuff about learning skills, but what to apply the skills to, that's what I thought that should be done different. Also because like in private banking is still mainly focused on a few asset classes, being mostly stocks and bonds. Still, of course, everyone now can say, yeah, we're doing private equity as well. Yeah, but the backbone of everything is stocks. And so what you see is that you learn a lot about public markets, and then it stops. No one was talking about private debt. No one was talking about private equity. It was not allowed to, because we're selling stocks here. There was a. So what you see is that you think you know quite a bit about finance, but then you find out that the whole spectrum you're working on is like 6 times as big as you thought. So that's what we'll also see with people coming for job interviews. You can be a private banker or financial for 10 or 20 years. And then people will say, like, I've got 20 years of experience. And then it appears like it's 2 years of experience and 18 years of repeating. And that is a big difference, because we want people to know about all the asset classes, about the estate planning, if you want to be able to give advice to a client, you should also know about all the other options, because if you know all the other options, then you can decide on what's best.
Yeah. Maybe a good pivot then into sort of the rise of multifamily offices, especially as a segment, right? It's one of the fastest growing segments in global wealth. What do you think has sort of prompted that evolution and explosive growth?
Yeah, that is a great question. What I think is that we've not been helped very well over the past 100 years. So we thought we were getting good advice because we didn't know any better, and there was no information available. So we would go to a bank or another party and ask them, and they would give us something, and we would think it's okay because they're to be trusted. And it was a nice building, and he had a nice suit, and the coffee was good, and some chocolates, and then must be good, right?
Right.
And now we know that must be good is not really a decision factor in finance, and that there's multiple forces at the same time creating the same outcome. So to make that concrete, what you see is the market is getting much more transparent. No one knew about, we couldn't get any information. Being an entrepreneur, there was barely any information for us to find. Everyone would cheat around a little bit with the benchmarks, and everyone would hide their costs somewhere. And how would a down-to-earth normal entrepreneur stand up to a system like that? People didn't know. And now you see the market become transparent. Everything is more out in the open. You see that also a generational shift, like older money would keep would keep to themselves, so they couldn't talk to each other about it, so you couldn't learn anything new. And what you see now is that it's very normal for an entrepreneur to call another entrepreneur and say, hey, you sold your business as well. What did you do? Oh, you do this. Oh, I thought about doing that. And that's how people can get to know a lot more about what their opportunities are. And that people also know now that there is more than stocks. Like if everyone told you there's only stocks, buy stocks. And now they hear everywhere about all these other options. So at least you know that if someone says there's only stock, it's not true. And that will probably motivate you to do a little bit more research. So the more transparent the market becomes and the more assertive people get, the better it's going to be for a multi-family office who works fully independent. Yeah. We want clients to be to know as much as possible. And that is, of course, something which has never been a thing at a bank. You want a client who doesn't know a lot about it, who trusts you, and then it's all good. And if you're not selling anything, then if you don't sell anything, what do I get? And if a client says yes on a proposition, I want him to understand why. Why are we looking at this exact asset mix? Why will it suit your needs? And what do you think about it? The client will decide themselves, and we will give them all the information to make the decision. That's a whole different approach than trust me, bro.
Absolutely. And I think actually that begs the question around how the needs have changed and evolved over time, even maybe since you started in 2019. Is it that sort of the want for like individual control, like so have a trusted advisor, but also that they have transparency into what they're getting from an advisory?
Yeah, I
like
think
yours?
so, like the need for transparency. Also, there's been, of course, tons of scandals, like,
Mm-hmm.
and nothing changes, of course, after the GFC, because it's in the core of when you have an own agenda as an advisor. If I have something to gain by selling something, I have to be a really good and strong person to not give in to that. But history teaches us that if you give the wrong incentives, that over time, this stuff always happens. People start selling stuff which they shouldn't. They don't explain it right. They leave stuff out of it. And that's when problems arise. So because people know, they've seen all these scandals, because also those scandals are were more out in the open. So people know, so they know something needed to change. And that's why if you add full transparency to it, like what Momentum Family Office does, everything is transparent. Whatever we do, whatever, how we make our own fee, how we make each decision on whatever we do for a client, like everything is transparent. The client knows everything. And that leads up to building a totally different relationship, because the difference is going to, instead of that I'm trying to sell you something all the time, I'm your independent advisor who doesn't have an own agenda. I don't make any own products. I don't have a performance fee. I don't have a kickback fee, nothing. I even think performance fees are, for our role, are definitely something you shouldn't do, because in the long run, it will motivate me to take more risk, because the downside is still yours and the upside is partially mine. That is a problem. So I'm a bit of a hardliner,
Mm-hmm.
but it means if you leave all of that out, you get a totally different relationship. You're indeed the independent advisor for the family. And that means that because people experience a totally different relationship and everything is transparent, it's also very, very, very hard to get a discussion about something. And how that ends up is that we have not lost a single client in almost 7 years, because how could we ever get in an argument?
Yeah.
I'm not sending you anything. I'm advising you to make the best decisions.
Right. No, it really like screams out trust, right? There's like a surface level layer of trust, right? But then you're going like layers deeper to build that trusted relationship. Well, they'll probably never leave Momentum because of that.
Yeah, that is also the goal. And I find it, of course, it's an achievement, but I also find it very, very normal. If someone would leave, I would be very, very, very surprised, and definitely need the feedback on what went wrong in that case, because if you do it this way, the relationship should be like 10 out of 10. Yeah, and I think because you're always focusing on a long-term perspective, I'm not thinking about what are we going to make this year? How much can I make this year on a client? If someone, we hope and expect someone to be a lifelong client, and then their kids, and then their grandkids. Mm-hmm. So if you focus extremely long-term, it doesn't matter about what happens first year, third year, fifth year. It's about doing everything right so that the client will stay. And then the most important side effect is in our line of business, like our kind of clients are not like waiting with tents in a row at the bus stop, because they're hard to find, like successful, down-to-earth entrepreneurs. But who run into them very often? Our clients. Our clients know our potential clients because they're in the same networks, they're neighbors, they're working in the same business. So really my dream when I left ING was, even though I don't really like the cheesy word, but to build a love brand, to build a brand where people are not just a client, but are very happy to be a client, and therefore automatically become ambassadors. I almost expect every client to be an ambassador, because I want them to be at least like an 8, a 9, or a 10 happy. Because if they are, then they will tell others because they like it so much. But of course, it's this is quite hard. Like building a love brand means you got to do everything right. You got to hire the right personnel. Which is like you have to find people who really love this job, who don't want to sell stocks, but really are there to help the client and the family. And you need to be like ahead of your game all the time. Like if there's like a new development, you need to make sure you have it, because if a client asks like, oh, it would have been great if you guys had this, but you don't have it, then it's going to be very hard to make him an 8 happy. Right. So everything is focused on creating ambassadors who will stay lifelong with the business.
All right, maybe we can jump into how you've built sort of this modern multifamily office, right? You're taking a big swing, I think, with the ethos of how you're doing business, which is great, and obviously been very successful scaling to 130 plus clients, families over the last 6-7 years. But you guys don't manage assets directly. Instead, you evaluate and select external managers, if I understand correctly. And so you're connecting clients to experts within their specific fields. Why did you opt for that approach, specifically that model, instead of an in-house setup?
As soon as you do something in-house, could be asset management, could be building your own private equity fund, build your own fund of fund, all those things mess with the independence. And it's not that I hate making money, but so there must be a very strong reason why I do this, because like as soon as you start making your own products, and especially if you add something like a performance fee to it, the profits of your business will at least triple, because that's where the money is made. So it's not that I don't like to triple my EBITDA, but it's just that I strongly believe that I'm not doing it for a reason, because I strongly believe that you shouldn't, because then the interest alignment starts to get messed up. And I know that like at least half of the multifamily offices do this in-house, but I still think that you shouldn't, because then you have the most transparent, solid, best for the client model, and you're not focusing on short-term wins, but on the long-term gains. And in the end, that is the most scalable, because this whole trend of people becoming more educated and asking the right questions, that will only keep on going. So that means that whatever other short-term win you'll choose, in the end, you'll lose to having a fully transparent, honest model.
Yeah. You mentioned scalability just now, and I think to myself, as fast as you've grown and you have a really high-touch service, right, where you're offering this level of personal relationship, how do you maintain that as you continue to grow past the 130 client mark? I mean, it must be challenging in a way as you continue to grow.
Yeah, that's 100% true. Like the only reason you can do it if you are continuously like looking into the future and thinking, what do I need? And we're now onboarding 1 to 2 families each week. So it means I need to have, that's why we're growing so fast as well in personnel, because what we used to do at the bank was, now you serve 100 clients, right, and next year is going to be 150, and then it's going to be 200, and then 250. And I hire private bankers who serve like 250 clients, and you have absolutely no clue who is your client. So we're keeping that about 10 times smaller. So it means that every few weeks, months, I need a new team, because I'm very aware of that. For the current client, growth is not automatically a win, because what often happens is there's more growth, and then the old clients, the current clients, they're getting less attention or getting neglected, and that's like the worst thing that can happen in a love brand. So I'm very aware of that. For the existing client, growth should always be a plus. So it means their team stays the same. So their wealth manager, their relationship manager, their junior, they're still as available as always, because they only serve 20, 25 people. That doesn't change. And what they do get extra is that we expand the team of the professionals. So you see, we doubled the private debt team, we doubled the private equity team. We bring in more and more specialists, so that for the existing clients, you can see that the quality keeps on going up. And then they're happy, with the growth. And then the biggest compliment ever is that the client feels that they're part of the success. Like they're happy that the business they're with is doing well, and that they are there for a few years already. Yeah, that is for me an amazing compliment.
Yeah, absolutely. And I think scaling probably your business, right? You were a solo founder. You now have 30 plus people, I think, in your organization. there has to maybe be a profile that is a bit difficult to find, because if you're talking about
Yeah.
if you're talking about somebody who just wants to come in and like sell a product to, that's not what you guys do. So
Yeah.
it has to be a very specific profile, I would assume. Have you found that to be really challenging, or is there a good pool of
Yeah,
candidates?
you're hitting the nail on the head. It's both things are tough to do. So you have we have a very like building a love brand means also that internally you need like a very serious culture. Like the business culture is the main USP of Momentum. It's also something which is can be copied. There can be like some multifamily houses get sold to larger parties, so they'll have tons of money in the bank to try to make more noise, do more advertising than we do, because
Right.
we don't do any. But the only way they can beat us is if I make sure that my company culture is about people who really want to do this job and really love working for clients. And then indeed you get our basic, like how we basic look at an employee. We tell people in their when their job interviews is that working at Momentum is a little bit a way of life. So it means 5 days of the week working in the office, and we expect people to do about 50 hours a week. And if you don't like to do this, then 50 hours can be hard. If you love it, it's very easy. Then 50 is nothing. So you're looking for a very specific group of people. So we also spend quite a bit of money on recruiters and headhunters to find these people. But if you can find them, and what we also do is we get a lot of very young students who want to work like 2 or 3 days next to their studies. We will get all these master students, econometrics, data analysis, finance, to come and work with us 2, 3 days a week. And sometimes it's like 6, 7, 8 of them. And then we'll take the best ones. So they'll work there for 6 months, and then the best ones can stay. They become a junior, and then that's how we grow the team. So we would talk about let's say a young Barcelona. You want to grow from the youth, because then they already have the right DNA. And exactly like you said, like that's the hard thing with a job interview. A lot of people, we get tons of job interviews. That's great. So other people also at other parties are finding out that the market is changing. And also what you see, a lot of young people are waking up a bit more, that they think, is this what I want to do all my life? I like sell a product. So a client asks me, what do I need? And I'm not going to tell him what he needs. I'm going to tell him what I'm selling. And that's also what the thing that broke me up then, that I thought, that is not what I like to do. That is no fun. There's no fun to sell someone something he doesn't need. So you see there's also a shift there from people who want to make the change, but then they come to us, and then you see that quite often the skills are sell stocks or sell at all, but we don't sell anything. So we need people who have a love for finance, who love working with clients, and who are broadly oriented on finance, who in their free time are also looking at investing, at real estate, at private equity, at how financials markets work.
And I can imagine when that alchemy happens, right? If you find that person, like this is a career for them, right? They're not using this as necessarily a stepping stone for 18 months to then just jump off somewhere else.
Yeah.
So I think that's actually a fantastic way to build a business as well.
Yeah. Oh, yeah. You notice that very good, because there's no churn also in employees. I think in those 7 years, there's one time that an employee left us out of themselves, because she was like, did her whole life corporate, wanted to try private banking,
Sure.
and then she said, well, private banking is totally different how you run for the clients. So she went back to corporate. But that's the only one who has ever left us by means of employees. So people really, and they can learn a lot. Like the juniors learn a lot more now than I learned in my traineeship, because this is a very fast moving, everything is going at a great pace. So you can learn a lot, you can take on a lot of responsibility. And of course, in a fast growing company, what you see is there's always, if someone is good, he will always get a promotion, and always quicker than expected, because I'm looking for good people who can like move up the ranks.
Yeah.
So I definitely got a few like serious outperformers, and there's going to be a very, very bright future for them ahead in with Momentum.
All right. So I think to your client base specifically, so like high net worth families, right? High net worth individuals, what should they be aware of as they're looking to like pick an advisor, a multifamily office? What are some of the things that they should be looking out for?
Yeah,
the
like
market?
I would advise anyone to do multiple meetings. Like, don't go to one place and think it's a nice guy. Even don't go only to Momentum. Go to a few places and learn to ask the right questions, because what you will get is someone in like on the other side of the table is a very experienced financial guy from an asset manager or a bank. He knows how to do the meeting. He knows how to make you feel comfortable. But feeling comfortable is a meeting is not a decision factor on how to do your finance. Like, decision making on your finance, what we say, bring everything back to data-driven, measurable things.
Right.
So we say there are like three things important. It's your returns, what did you pay for it, and what risk did we take? So performance, costs, and risks. And everything should be brought back to those three. Of course, it's nice to have a nice guy to work with, but all of that together is like 5% of your decision making, and the other 95% is performance, costs, and risk. So what did I get from the investments we made? What did I pay for it? Was it like reasonable for the market, or was it heavily overpriced? And especially like take risk into account, because we're used to looking at lines, and then if your line is above mine, you're a better investor. But everyone who's deeply into finance knows that that doesn't say anything unless we'll know what risk we take. If we go to a casino, one of us is going to double the money. If you pick red, I'll pick black. And then one of us can say, I'm a great investor. Look at that, doubled my money in a day. Yeah, but if we take risk into account, we're not here to gamble. These people have already, they built something up, and we're about maintaining what we have and then grow it. We're not here to take the risk of hit or miss. So learn to ask the right questions, and learn that one thing is a very good example. What I used to hear very often was also new clients saying, Frits, I'm happy to do like, if you earn more for me, I'm very happy to do this performance fee and stuff. And I'm telling people, like, I would love to. It would be great. As I said, it would be great for my EBITDA. But I'm explaining to people why they should not want it, because of the shift in risk and the misalignment. So stuff that sounds good, if you don't ask the right questions, is not going to be good for you. You don't want a performance fee on your public markets, and definitely not on your advisor or your private banker. Like private equity funds have a performance fee, but that's a whole different market. There it's normal, it's the standard. But don't do anything like that with your private wealth advisor.
So I think succession is a very sensitive topic for many families. How do you approach these conversations in a way that builds unity rather than tension? I assume that can be quite challenging.
Yeah. So there's a few steps before that people don't like to think about it, and very often no one's told them about it. What you see is, this is also one of the reasons something I took from the bank and did totally the other way around when I started Momentum. What you see is almost all parties in the market are there to get a mandate. I come to you, and what is my goal for this meeting? I want to get a mandate for 5 million in stocks, whatever. And as soon as I get that, get back on my bike, get back to the office, and that's how we're gonna do it. Because you're not thinking about what your client needs all the time, and that's what you should. And if you do that, then you find out all these other important topics like estate planning, like staying anonymous, prenuptial agreement, investing in name of the kids, get the kids into the company. So what I saw is that with at least 8 out of 10 successful entrepreneurs has not covered these topics because their bank or asset manager was never talking about it. Everyone was focusing on doing the public market deal.
Right.
So what I said when I started Momentum was, we're going to do the estate planning for each client who joins us. And our hours are going to be for free. Because I said, the only way to really do professional asset management is if you start with the estate planning. So for every client who joins us, we're going to look at the structure and we're going to restructure for whatever needs the client has. And after that, you're going to do the easy part, because investing is, if you do investing all day, then it's just, you only have to use your knowledge to mold the client's assets to his wishes. But first, much more important, go and have these talks about stuff you don't want to think about.
Yep.
You're going to walk out of this podcast studio and there's going to be a tram, and what happens when the tram hits you? That's stuff you need to think about now, also for yourself, also for your kids. You don't want young kids to have a lot of money coming their way, or it's all crazy situations. Both parents pass away, a parent passes away, and then the child passes away, and then the money goes through the child to an ex-partner, whatever. They're like all these kinds of crazy scenarios you don't want to think about, but we're going to help people to think about it, make it easy, and then take the steps. Because after you've done that, life is better, because you don't have that voice in the back of your head, like saying, you still need to arrange this, right? Which you've probably had for years. So we help people as entrepreneurs. We serve a lot of artists as well. We think you can be a better entrepreneur, a better artist, if you don't have these worries living rent-free in your head.
Right.
Yeah.
I guess I'd be remiss not to ask, we're coming from the wealth tech space. Obviously, I'd be really curious to hear your thoughts on how you're using maybe technology to enable a better customer experience.
Yeah, that's also an interesting topic. Like, what we tell clients is we're going to improve everything. We're going to bring costs down. We're going to bring risk down. We're going to get performance up, because you're going to look at everything data-driven. The only thing we can do is make it more easy and easier to manage, because we're making it complex, as how serious wealth should look like. What we saw at the bank is, if someone banks 30 million, you would arrange it as it was 3, being mostly stocks and a little bit of other stuff. Well, we say, especially when the numbers get bigger, you need a very professional, well spread over all asset classes portfolio, and that means it's going to be complex. So then I say, if I make everything more complex, the least I can do is make it easier to navigate. So consolidated reporting over all asset classes, make sure that the client very easily can see whatever he has, that he has one good overview, how it developed. So what do I have? How did it develop? How did the market develop? To help people. For them, it's going to be just as easy. And in the meanwhile, we're behind the scenes doing quite some number crunching.
Right.
And one of the USPs for Momentum is we spend tons of time on commitment pacing. So liquidity prognosis. Because we think that, especially in the private market, like private equity selection is of course very important. Like, what funds do I select and how do I get to the top quartile, top decile funds in the world? Because everything we do is internationally. But that's only the start, because selection is half of your profits in investing in private markets, and the other half is commitment pacing. You need to know from each fund, how much are they gonna capital call in what year, and when can we expect approximately what distributions? And that's something we do. That's why I have all these data analysis guys and these econometrics guys, purely doing the number crunching to make sure that the portfolios we build for client are very well balanced over private equity, over venture, over secondaries. We use private debt as well to make sure that you have the private debt. That's what you use until you need it for the capital calls. If you do that right, that is at least as important as the selection. It's one of the main reasons why people come to Momentum.
Perfect. I think I'm going to end with one final question. I think you guys sort of sit in a league of your own in a way, and how you think about building a multifamily office. You've been in business for 7 years now. How do you see your model evolving over the next 3 to 5 years? Like, how do you continue to sort of lead from the front in the way in which you're doing business?
My dream is that this is going to be the standard for private banking, and that we're all going to say in a few years, like, what did we do for 100 years? Like, how do we think that was a good system? So I'm happy with any competitor who is following these same rules, and for everyone who doesn't, I'm happy to explain why why I think this is better. This market is going to develop very, very quick. All these forces I mentioned before are going to stay there and only become stronger. Everything is going to be more transparent. There's going to be a huge generational shift in assets, and we focus on so we also have like people in their 80s and 90s, but especially entrepreneurs 40s, 50s, 60s, they're already now thinking a lot more about these topics. So what we'll see is the market itself will develop very, very quick, and momentum will grow. We're growing at over 100% each year, and that will continue for quite a while. I expect momentum to be 10 times as big in maybe 3 or 4 years. As long as we stick to what we believe in, that is not like a guess. That is what is going to happen. And I hope, and in the end, it's going to be better for everyone. It's just the shift that parties who now make the products and try to sell them as well,
Right.
they're going to focus on the products, and that they're going to do very well, making the best stuff there is. And then I'm going to come by with my client to get it. So it's going to be rewarding for everybody who does their work well. If you're a good advisor, if you make a good product, you're going to do good business. But all these parties in the middle who are underperforming the market heavily each year for decades in a row, they only exist because no one knows, because the market is intransparent. And that will end. And then there's a lot of parties who are going to lose all their business. And that is in the end better for the client.
I think that's a fantastic place to end. Great answer, Frits. Thank you so much for joining us today and being our first guest in Amsterdam, taking the show on the road. So we really appreciate it.
Thank you so much.
Absolutely. That's it for today's episode of Wealth Insider. If you enjoyed this conversation, be sure to subscribe to the show wherever you get your podcasts. You can also find more insight on performative.com, and we'll be back soon with more conversations from the people redefining wealth management.